Sam Altman, the CEO and co-founder of Openai, is taking a nuclear energy company called OKLO. OKLO is the ticker public to help further his AI ambitions. What does that even mean, needing to bring a nuclear energy company public to help further his AI ambitions? Well, it's because AI has rapid and growing needs for electricity. And the data centers that power this artificial intelligence, the demand from electricity from these data centers, it's expected to triple in the coming years, from 2.5% of electricity demand to 7.5%. How are we going to sort of meet that differential? Because for years, electricity was effectively a very low single-digit growth market. Now we're talking about electricity reaccelerating. So where is the potentially trillions of dollars of investment going to go to potentially meet that demand in terms of electricity? You know, what types of usages are you expecting? You're talking about the equivalent of tens of millions of houses coming online. Well, here it is, Sam Altman, chairman of OKLO. He's also the co-founder and CEO of Altman Acquisition Corp. Altman Acquisition Corp was a investment vehicle that was effectively the merger between Sam Altman, hence the Alt, working with Churchill Capital, that's the C in Altman, taking around $300 million, investing it in OKLO at a pre-money valuation of around $850 million. We'll talk more about the current implied valuation towards the end of this video. So around $300 million after fees, after transactions. You know, you think your credit card fees are a lot. Here it's $42 million on that $300 million. So net cash to the balance sheet around $260 million for OKLO. Now, management, particularly Sam Altman, does have quite a bit of history here, where previously Sam Altman was running Y Combinator, and OKLO, Y Combinator, for those who don't know, that's an incubator to help startups get initial funding to, you know, see their idea and start, you know, helping their idea get traction. And so he was, you know, running Y Combinator. OKLO was one of the candidates. It was funded, and Sam Altman has been chair of OKLO since 2015, so helping oversee their growth. So that is, you know, let's say over a decade to validate its technology, or about a decade to validate its process and its technology. And, you know, just this past year, they've been working together to bring the company public. So that way they're ready for shareholders. You don't have any sort of delinquent filings or things like that. That's what I like to see. And he will continue. Sam Altman will continue as chairman. So this isn't just a, hey, I'm investing some money. He clearly does believe in this journey in terms of bringing on cheaper, cleaner nuclear energy in the years ahead. And, you know, what you're talking about with OKLO is that they have over 700 megawatts of customer interest under non-binding, effectively agreements. So that means the customers can walk away, but the customers effectively said, hey, we are interested in 700 megawatts. And what they're talking about is, yes, there is significant challenges with working with the regulatory framework. You know, over a multi-decade perspective, you've only had maybe a couple of licenses approved. Now, they've been working on getting a new license since, I believe, 2016. And their goal is, as you can see here, is to have their first deployment in 2026, 2027. So that's when you'd start to see the business, you know, start to actually delivering real revenue, start to scale up. So that does give you, you know, a quick understanding of what type of risk profile you're talking about here, because this is a SPAC. This is a company that's not delivering revenues yet, but it is a company that's, you know, clearly very forward thinking with, you know, investors that have, you know, grand aspirations like Sam Altman. And sometimes, you know, it's like that Steve Jobs advertisement is that, you know, the crazy ones really do change the world. I'm not talking about the latest, you know, Apple advertisements that are garbage. I'm talking about like, hey, you know, sometimes it takes someone that has a strong belief that most people go, you know, I just don't agree with, that ultimately does prove out. That might be the case for OKLO. We'll talk more about that, you know, later on in this video. But that was what happened with Sam Altman with Openai. You know, a lot of people thought, like, what are you doing? And, you know, now it's a business, a private business worth tens of billions of dollars, if not around $100 billion. And so it is interesting, you know, to see this, you know, development of OKLO being this owner operator of many small scale, low cost nuclear power plants. And you can get a sense of the size. Under 2 acres of land required. It's really blown me away here. I mean, they're trying to say completely reimagine what you think clean energy could look like, because they're saying the cost for the estimated fuel and construction costs for their Aurora powerhouse design is under $70 million. under 1 year estimated construction time for a 15 megawatt plant, which is potentially scalable up to 40 plus year estimated design life. So this is I'd argue, a beautiful model of what a power plant could look like in the future. And the under 1 year estimated construction time does mean that you fail quickly. If something's not working out, you'll find out very quickly if something's like going over time and going over budget. When you have something that's a 4 or 5 year project, that the risk of going significantly over budget is much higher versus when you're saying, hey, it's under a year. And if it's not, then, you can very clearly say, okay, these are the parts that are going to cost longer and this is the labor. And, it starts rolling out. You start seeing it. But this, you could start seeing this as, hey, maybe they could make this work, and it's not taking up tons and tons of land. Looking at the financial attributes, they're obviously looking for this business to be a recurring cash flow from long duration contracts. They're seeking 20 to 40 year customer power purchase agreements. So the customers would say, hey, we'll buy the electricity from you for a multi-decade perspective. They're looking to build these near data centers on the East Coast. The underlying operating structure for OKLO in the coming years is around 30 to, let's say, $35 to $55 million in operating expenses. That's before the $70 million in estimated construction costs. But they will have that $250 million in cash on balance sheet. So they do have some breathing room and could get there. They could get to the initial, site and construction. And critically, I think a key selling point for them is going to say, look, not only do you need the energy, but this energy is going to cost less than the alternatives, even advanced nuclear, suggesting that these smaller nuclear sites could be much cheaper than renewables with battery storage, natural gas with carbon capture, even the advanced nuclear. So we'll see how this plays out. This is obviously, hypothetical. We'll see if they actually can deliver on that. But management is, I do like the fact that, it's normally, a lot of people, there's going to be this like gag factor because it's like, oh my God, it's a SPAC. But I'm curious what Sam Altman's up to. Like, he's created a lot of value with ChatGPT. I enjoy using it every day. It's part of the core function of AI Ticker Chat, which is trying to superpower how investors do research. So you can check out the free month, in the link below. So I'm curious to see it, even if the initial gut reaction is like, oh, SPACs. Like, I enjoy the fact that for this presentation, he's not going crazy with the like, yes, and we are going to deliver X billion dollars in profits, and we're going to be this huge company. It's like, this is how it could potentially work. Maybe it does, maybe it doesn't. Let me just, provide this sort of framework for how we're thinking about it. And that's honestly better than the like, by 2025, this is how much we're doing, and then just completely whiffing on it, because most management teams did whiff on it from their SPAC presentations. So I prefer that they do a structure like this, saying, hey, this is what it could be in the years ahead, even though it's less precise, suggesting, look, based on, let's say, 5 15 megawatt units deployed, they could generate around $40 million in revenue. And then when you start layering in, let's say, the 50 megawatts, the more advanced, bigger powerhouses, you're talking about potentially hundreds of millions. So if you get 20 50 watt units and 25 15, you could be generating, $750 million in annual recurring revenue from these different, small power plants, which is really interesting to think about. There's a whole other argument about fuel recycling that management also talks about. We'll bring that up in a second. But how should you think about the economics of this? So management's saying the first of a kind versus the nth of a kind. The first of a kind will cost around under $70 million. So they're saying $69 million, most of which is actually the initial fuel, which is interesting to see. And then around half is the plant cost, a little under half. So expecting around $13 million in revenue, $5 million in annual expenses. So it does get to about $8 million in annual cash flow. So it does get a payback period of 8 years, an unlevered return of 12%. Unlevered is interesting. I mean, the reason why this is particularly interesting is if they can prove this out, then you can borrow money and start generating, really significant levered returns of, 20%. If, once again, they can prove these types of financials out. So, it's one is, can you actually deliver at, let's say, $69 million like they're saying here? 2, will you get the $13 million? 3, will it only cost you $5? And, 4 is, does that mean putting all these pieces together, there's no externalities, no surprise that actually gets you to that $8 million in profit per year on that $70 million in construction. So there's a lot of, assumptions that go into this, but it does show you what the economics could look like over time, and certainly what the bigger, nuclear facilities would look like in terms of the attractive return on investment. And so, should investors consider buying OKLO stock? Sam Altman has his interest in it. First of all, in full disclosure, this is not financial advice. I do not own a stake in OKLO. Also, recently, A. Woods, 93, a premium member of Unrivaled Investing, commented that thanks to Unrivaled Investing, this is a direct quote, "I'm currently ahead of my investing goals to retire at age 45. Another subscriber recently added the unrealized profits, and he mentions 2 different stocks, is enough to cover 302 years of membership at Unrivaled Investing. So for compelling investment ideas, come check it out. I do expect to raise prices later this month, so lock in the favorable pricing now." So Jacob DeWitt, so he spoke with various different, I think CNBC and Bloomberg, talking about this deal, and he's talking about the 300 million, really 260 million, gets us quite far. We don't necessarily see a need to go back to the market from an equity perspective, except for very new high value add things that we might pursue from an infrastructure perspective, like fuel recycling and things like that. The reason why this quote is important is it does suggest that, hey, there's not going to be a follow-on issuance, at least for now, until they've really proven themselves out. Now, just, back of the envelope math, you're talking about $260 million in cash, annual cash burn of, let's say, 50, let's just round up, 50 million. So 2024, 2025, 2026, that's 3 years at, let's say, 50 million. So you're at 150 million versus the 250, 260. So now you have 100 million left over to build that plant. And, they're saying it'll cost less than 70. So you do have some cushion there. So, you could see them go all the way with this raise. And that, I think, is the exciting part, is that oftentimes with SPACs that are like this, where it's revenue years from now, there's this, hey, we're burning a lot of cash. And by the way, next year or the year after, after we hit some sort of milestone, we're going to have to raise again. That's really not what they're suggesting. They're saying, hey, if we do raise again, it's because, we will have already proven the first structure. And, we're considering something like fuel recycling, some additional initiative that could be, very creative for them. So I look at this as, very, it's less bad for shareholders when you see this sort of commentary. That said, it is worth understanding as a SPAC that, the base rate in terms of how these probabilities play out is not very good. This is not the first company that Churchill is the C in the Alt-C company, has, this is not the first company that Churchill has brought public, via SPAC. You have Lucid Group. I think that's the Lucid Motor, and you have Multiplan Corporation. Multiplan is down over 90%. Longtime viewers actually know that I covered Multiplan. You could check out this was, I think, one of my original YouTube videos covering Multiplan, and I gave it a hard pass, which I was glad to see that, pat myself on the back for dodging that 90% plus decline on Multiplan. I don't always get them right, but I think it's important to call out, if you see something that's glaringly wrong and you call it out and say, hey, this is a problem, it's worth, sharing with potential investors. So, as people consider, these different, companies that trade. So looking at OKLO, based on the teeny tiny footnotes from the presentation, I believe they'll have around 130 million shares outstanding, which at around $12 a share, the stock is sold off over 30%, I think, today. That does suggest it'll have a $1.6 billion market capitalization. So that is a high, I'd say a lottery ticket, $1.6 billion lottery ticket for the execution in the years ahead. And this gets to the question of what type of journey do you want to have in the years ahead? Because the reality is there are just different paths and there are different types of investors. Sam Altman, I'd argue, is sort of post-money. He doesn't need the money. He doesn't, I think, even have an economic stake in Openai. And so he's doing this because he wants to. And he's in that part of his journey where he's not looking to maximize, I think, every dollar. I don't think. And so what he's trying to do is say, hey, wouldn't this be cool? And by the way, this isn't his only nuclear bet. He also has another company called Helion, I believe. And so, which I think Helion actually sold electricity to Microsoft in a forward agreement. So, there's clearly he has several bets going on looking to accelerate nuclear energy. And I think this is important, getting these small, reactors, easily deploy them, low cost, rapid deployment. I mean, under 1 year for $70 million, that would be a game changer, just to be clear, if we can get there, like in the next decade, like they're suggesting, 2027, 2026. And so as an investor, you need to ask yourself, well, what type of journey do you want to have? Do you want to have the sam Altman type of thing where you're, looking at more speculative bets and a lot of them will not work out? Where you're, sort of the seed investor, or, buying these lottery tickets where you're prepared to handle a lot of mistakes or a lot of things that go to zero? Or are you more the type that say, hey, I would rather, and this is that earlier model, that's not me personally. And, me personally, I'm looking for proven operators where I can say, hey, I like their cooking. It's like going to a restaurant. You've seen the reviews. You've seen how they've done over time, and you go, "Hey, I know what I'm going to get roughly. Maybe one night or two, the chef's not great, or he swaps in a different chef. But broadly, like, hey, if I go to In-N-Out, I'll be getting my, my double. You're not expecting a slice of pizza if you go to a burger chain, and so." My personal approach is find the capital allocators, the proven management teams that I can partner with, over time. And I've called out Fairfax Financial, one of my top holdings. I did a prior video on it, proven management team, proven execution. So I personally, OKLO, even though it's neat to see Sam Altman bring these forward thinking companies public, I think it is extremely risky. There's so much unproven about it. And that's the point of this video. And I could understand some people do have a speculative itch. Some people say, hey, I do like to have my gambling funds and, keep 1% of my funds. And instead of going to Vegas, I put it on these different types of businesses. I'm not saying you shouldn't do that. Every investor, that's why every investor needs to have their own journey. Personally, that's not for me. I would rather find the companies where I have more conviction, so that way I can make them bigger positions and I can just focus on them and I feel better. And I enjoy watching and reading about their developments over time. I enjoy that. Whereas the psychological hit of like, oh, another company went bust, that just, it would bother me to think about it, even if it was a small position. I do have a few teaser positions, like, 0.1%. That I do track, but for the most part, most of my portfolio is concentrated in a handful of companies. I'm looking for, the quality compounders. So I hope this video talking about OKLO, sharing about, what it is, Sam Altman's involvement, has been helpful for you. If so, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in.